welcome back. So I'm gonna make a how-to video on how to use the ROAR market signal service. Now, if you're not a client of ROAR Capital and you're trading stocks, whether it's penny stocks or my signals or anything else, you really want to be a client because we offer no PDT rule and 25 to 1 leverage on any deposit that you make. That's right, no PDT rule. So you can deposit as little as $2,000 and we'll give you 25 to 1 leverage on that. So we'll give you $50,000 worth of buying power intraday. Okay. Now, that being said, if you are in ROAR and you are a member of our market signals, I'm going to discuss with you how to use these signals correctly. Now, my signals are all statistically based analysis. I'm a big believer in statistics. So when you break down the average move of any asset, most of the time you're going to come up with something that looks like this. It's going to look like this, okay? So these are the statistics from the open to the close every day of the S&P 500. Now you can do this on any stock you want. You can do it on Forex, you can do it on anything. But as you can see here, over a 12-month period, you can see how many times the market actually went higher than 2%. Not a lot, right? As a matter of fact, there was only 2 times in the last year the market went higher from open to close, 2% or more. And you can see here one time where it went more than negative 2%. But what you'll have is usually you'll have this type of bell curve. Now, one of the things you should notice is that the market, for the vast majority of time, stays between 0.5% higher and 0.5% lower. Okay, lately it's been going about 1% lower, right? But for the vast majority of time, I would estimate approximately 88% of the time, you have the market falling within this range, okay? So if we extrapolate that to onto an actual chart and we adjust for volatility, because that's really important, okay? I don't just take these numbers raw. I run these numbers every 3 months to get an idea to make sure there's no outliers. But if we adjust for volatility, which is very important, and there's a special technique that I use to do that, you're going to come up with numbers that we overlay on the chart. So again, remember those numbers are open to close, okay? And we do this on every single asset, so we know exactly what we're looking at, okay? So what this is basically saying, if we take away all of these, if I take away the actual symbol, so let's say I just take this off for a second, okay? You'll have these levels here every day. Now these levels start at the open to the close. So what is it basically saying? It's basically saying that statistically, no matter what, the market will most likely stay from open to close somewhere like this. Okay. Now there will be several deviations of that, okay, and that's where the skill comes in learning it. But for the most part, 88% of the time we can expect the market to stay contained within these boundaries. Make sense? Okay. So what we're going to do is we're going to analyze the markets that are best suited for non-trending environments in order to exploit rotational markets. That's what we're going to do. So each day in the in the Discord room, if you're a member of our market signals, I will give you the stocks that I'm looking at. But you really have to understand what it is that you're trying to do. Now, you can use these levels for entries, or you can use them as targets. And I kind of like to use them as both. However, if I'm very bullish on something, I may just enter the market right away. And then I'll use this for a target, this first level, the second level. Does that make sense? Okay. So in the signal service, there's going to be two types of signals. The first type of signal is going to be a pre-market signal. Okay. We'll call it pre-market signal, where I believe that we're going to go, let's say I'm bullish, I believe we're going to open here and go to the first or second, maybe even the third level. In which case I will use the bottom two levels as my stops. So when I size my trade on the open, I want to size my trade so that I'm not losing more than my max loss. I may actually, if I'm really bullish, I might even actually add at the lower level. Okay, hopefully you guys are with me so far. Okay, so that's the pre-market signal. The next type of signal will be after the open, when I believe we are going to come up to one of these levels, test one of these levels, and bounce off of one of these levels and come down to another level. So the way you use these levels is you use them sometimes for entries, but mostly for targets and stops, because you want to size your trade accordingly. So anytime I take a trade, for example, if I'm taking a long trade, my stop is going to be always a little bit further than the next level. So you can say if I was buying Nvidia and I was risking $500 a share, I'd buy 84 shares of Nvidia, and I would, if it drops down to this level, I'm going to lose $500. It might be 1,000. Yeah, okay, I got it at 1,000, right? So $1,000. If it goes to this level, I'm going to make $1,000. If it goes to this level, I'm going to make $2,000. Okay? And the other thing that I will do is I will occasionally scale into the position. So let's say that I want to buy this level and I want to buy this level because I'm bullish. So what I will do is instead of long position, so I'll buy this level, right? I'll buy this level and I'll buy this level. Well, the first one I bought 84 shares. The second one I bought 105 shares. Okay? So what will happen is this one, if it doesn't work, when we go back down to this one will work and I can break even on the trade. Or if I want to be super aggressive, let's say that I'm very bullish on it and it's coming back far, I could risk $2,000 or double the size on this level for a retest of this level. Does that make sense? Okay? So there's multiple ways that you can use these levels every single day. You just have to know what the levels are. Now, I told you there's two types of things, right? There is the pre-market strategy, and those I will tell you about 5 minutes before the open. I'm very bullish, so I will either jump in right on the open and go, or just before the open with a limit order. Very important if you're going to do the pre-market symbol. Pre-market, I want you to use limit orders only. Okay. And because the slippage obviously in the pre-market is going to be a lot higher, right? So pre-market limit orders only. Okay. In the after open signals, okay, you can use market orders or you can use resting orders. Like, let's say you have to go to work. Well, you can place a resting, let's say I'm bullish on Nvidia. Well, you can place a resting order down here with a limit here and a stop down there and a target there. So you don't even have to be at your desk most days to trade these signals, okay? Now I want to be clear. Here's the problem with the pre-market orders. By the way, guys, please watch this video 2 or 3 times before you try to trade this to make sure your results are the same as mine. Now the pre-market orders are going to, or we're going to call the opening range signals, which you'll get before the open, then it'll just be like buy Microsoft, okay? I'm going to place that in the pre-market most times about 2 to 3 minutes before the open with a limit order to see if I can get hit, and I'm going to have a target built in right away. Now the problem with those is that depending on where we open, we're not going to know what these levels are beforehand. So we have to do some approximations of where we're going to put our stops for the pre-market limit orders. Very, very, very important, because this is how you size your trade. All right. Now, so let's say that I was long NVIDIA in the pre-market, and the market hadn't opened yet, okay? Now let's just hypothetically say that NVIDIA in the after-hour session was trading something like this, okay? So here it is. We're at 880. Let's make it 880. And we're about to open, okay? Now let's just say that I was long pre-market opening range trade signal, opening range signal, we'll call it ORS, okay? If it's an open range signal, what I have to do is I have to look at the day before, and I will post a picture of the chart with the day before, which will have the levels on it. So what you're going to have to do is make an approximation as to where your stop will be. So we're going to go long here. We know that the 1 deviation down is there, 2 deviations down is there. So depending on how aggressive you want to be, and this is entirely up to you, let's say you want to be very aggressive. Well, you know that that's approximately where we're going to open. And you want to get at least 1-to-1 on your money, right? So if I was very bullish on NVIDIA, I might go for 2-to-1 on my money. Okay? So this is how I would judge it. I would use this tool, right, to say, okay, I'm going to buy pre-market at 880 right now, right? My stop is going to go 869.45, a little bit lower, right? And my target is going to be 900, right? And I would do that. That would be a pre-market trade, because you're not going to know what these levels are until they actually print the first print, in which case the levels will appear. Now on the after open signals, you don't have to worry about that, because we'll actually have those levels in effect. Does that make sense? Okay? So it's very important you size these trades properly. Now with the opening range or pre-market orders, I'm going to call it the opening range order, opening range orders, okay? It's very, very important that you size these trades correctly, okay? Because the volatility in the first couple of minutes is insane, all right? Now, ideally, we're probably only going to be trading the big 7, so the spreads will be relatively decent, right? You don't have to worry that much with the big 7, right? But if we do trade any other stocks, we have to be very careful of the sizing. So if you want to be super safe with your sizing, do 2 levels lower for long or 2 levels lower for shorts. Okay? Now once we have the open and we have these actual levels, you guys will understand, you'll be able to see those levels pretty clearly in the room. Okay? Now the skill in this is not knowing the levels. The skill in this is getting the direction right. How do I get the direction right? Well, I use a combination of tools, right? Mostly approximately, 48 years of trading experience, right? I'm not going to really tell you guys how I do that because I don't really want to be in the education business anymore. There's a lot of different things that go into, why I'm long or short. Probably about 8 factors that I look at each day, right? I'm looking at volume profiling. I'm looking at the statistics. I'm looking at, the options market, the zero DTE market. I'm looking at the general flow of the higher time frame in terms of my order flow course, whether or not we're in a bull campaign or whether or not we're in a bear campaign, how aggressive those campaign, are we overvalue or are we undervalue? There's several different techniques that I use to do that, okay? So it's not just about knowing the statistics, it's also about knowing which direction. And every morning you'll see I'll post something like this. If it's yellow, it means I expect the market to be rotational between the 1 and the 2 bands. If it's yellow, I expect the market to do something like this. I expect the market to open and do something like this, or some variation of that, okay? That would be a yellow type of day, right? If it's green, I'm hoping that the market will open and come down to one of my lower levels and fly up. If it's green, I'm hoping the market will come down to one of my lower levels and fly up 1, maybe 2, maybe even 3 levels. Okay, so I can get a really nice risk to return there, right? If it's red, I'm expecting the market to hopefully pop up, come down 1, maybe 2 or 3 levels, okay? Now remember, this is a level 2. This green level is also a level. So you're going to size those approximately. And every morning I will post this in the room, what I expect that stock to do on that particular day. Now, these are the after the open trades, okay? Not the opening range pre-market trades. These are the after the open trades, okay? In the room, what I'll do with the pre-market open trades, I'll just have an arrow pointing in which direction that I expect that to go, okay? So make sure you differentiate between the two. Please watch this video a couple of times, especially with the sizing. If you don't size the opening range trades correctly, you're going to be in big trouble. Okay, guys, thank you for your time. If you have any questions, please, it's better to ask your questions than trade and lose money. Thank you all, and if you want to become a member of the Market Signal service, you can head on over. We have a trial offer, right? And you can try it out, see if you like it. We'll also do signals on Forex, by the way, so not just stocks. Okay, guys, thank you all. Bye for now.